Hi, this is Roger Conrad. I'm co-editor of MLP Profits with Elliott Gue. Hopefully many of you have been buying some of these master limited partnerships over the past few months since we've started MLP Profits. We have basically been seeing some really terrific gains from the conservative companies, which are basically owning energy infrastructure and relying on very, very steady fees that don't vary much, even depending on the level of economic growth or energy prices, to the aggressive group that we have, which is focused on companies that are heavily tied to commodity prices. And we've really seen some nice gains. And I guess the question for those of you who are new, or even for those of you who have managed to buy some of these, is where do we go from here? Obviously, a lot of people are very worried about the economy. They're very worried about the possibility of a big W, which is basically that we had a downturn last year, we had an upturn since March, and now we're maybe heading for another downturn again before the final upturn, if you will, when things begin reverting more to a bull market situation. And I don't completely discount those theories. I think there are some very big positives, and in fact we're seeing them manifested in the MLP group. One of which being access to credit. Companies are now borrowing, and even these MLPs, and even the strongest of these, or the highest rated of these, are only triple Bs, triple B minuses. But even these companies are now borrowing money, and long-term money, at very, very low spreads to treasuries. 200 basis points, a couple of deals just recently. And these are very, very low spreads, and if you factor in also the fact that the treasuries that they're based on, that these spreads are based on, are also at extremely low yields. You're looking at really, really competitive borrowing rates. And what that means is more projects are economic for these companies to do, of course, because they're easier to finance, cheaper to finance, and that means higher cash flows going forward as they bring new projects online. And that, of course, translates into higher distributions for us, which pushes share price, unit prices up as well. So these are very, very bullish signs for the MLP group. They're also bullish signs for the economy, and they're bullish signs for the market. And really, I think it all but eliminates the possibility of another big credit crunch as we saw last year. So if there is going to be another big decline in the market, it's going to have to be for another reason. In that case, it'll probably be something that affects more vulnerable sectors, or more economically tied sectors, I would think, more than these MLPs that we have, which again, particularly the ones that are involved with energy infrastructure, have proven themselves to be pretty much very recession resistant, almost utility-like in many ways. So I think this is a huge positive again going forward. Now, would they go down if there were a tremendous sell-off in the market? Probably so. And we'd have what would amount to another buying opportunity again. But as long as these MLPs are able to borrow money cheaply, as long as they're able to get new projects, and in the case of oil and gas producers, reserves, more purchases of reserves cheaply with again low cost capital, this is a bullish situation. We're going to see more growth in distributions, and ultimately growth in distributions translates into higher share prices. So I don't think the near term is anything to be afraid of here. I think further out, we may be concerned in some cases about inflation picking up again. Certainly is not much in evidence today, and I think given the way that the state of the market, which is basically, on the one hand you have Treasury securities and the U.S. dollar, on the other hand you have everything else. Even if you do have some more inflation, even if you do have higher Treasury rates, some erosion in that area, you still have a lot of upside for other types of securities. And again, we're looking for things at growth, and growth in distributions is a tremendous hedge against inflation. Now, as far as if we see some really big time inflation going forward, there's not going to be a whole lot that's going to be better for weathering that, at least for income investors, than the MLPs that we have in the growth category and in the aggressive category, because these companies all have a play on energy prices, and we're not going to see inflation without much higher energy prices in any case. And so these things are going to keep pace. And I think, again, an excellent addition for any portfolio. That's what I have to say today. And bottom line, stick with your good positions. If you don't have them, add to them, and I'll look forward to chatting with you next time.